Hello and welcome to the Sweeney Show, a legal and business podcast. Today joining me is Des Murphy of MBC Insurance. Des is here to talk about all things insurance related. If you're a first time buyer or house owner, or any of those categories, Des is here to give us all the information. So Des, you're very welcome.
Thanks Dave, thanks for having me.
If you want to maybe tell everybody some information about yourself, your company, who you are and how long you're in business.
Yeah, I am Des Murphy, I'm a director of MBC Insurance. We're commercial corporate insurance brokers and we have a full personal line service as well. We're based in 36 South Mall. We have 23 staff, 2 offices in South Mall, and we also have an office in the Stole. Basically I'm in the business far too long to remember now, 30 years. I do mainly commercial myself, but as I say I have 5 staff who do personal lines, household, motor and all that. I'd like to think of ourselves as kind of a boutique brokerage where we give individual advice, look after clients very, very well and make sure that their needs are met, and if they have any issues with regard to claims, covers, anything like that, that we look after them and hold their hand through the whole process.
Excellent. That's a full rounded, full bodied insurance offering under the one roof. So just say I am a first time buyer and I'm buying a house, just say it's a house in an estate in the suburbs of Cork City. We take it maybe 10 years old. I have my deposit saved up, so I have my 10%, and I've now secured my mortgage. And the bank has said I need house insurance. What is that, and why do I need house insurance? So what's part of the whole process? Okay,
so first things first, the house insurance is probably one of the most important products you take out, that and life insurance, because it covers basically your most prized possession, or the biggest purchase you're going to make in your purchasing career, which is a house. The bank invariably will try and push their own services to you.
Okay. So you can buy insurance off the bank who give you the mortgage.
They will do the house insurance.
You can go yourself online, just go on the website.
Yeah.
Or direct from a broker, is it?
Or you can contact us or a broker.
So are you categorised as a broker?
We're broker, fully independent.
Okay.
We have probably 60 or 70 different agencies with different insurers that we can offer choice.
So you could go to the market and you get the best price or best quality product that's out there.
Well, we actually have a quotation system that's linked into all the insurers. We put in all the different covers and then different options come back to you. But the first thing with the house is that, number one, the bank offer you house insurance. It's implied that you have to take it. You don't. Okay. I think if someone wants the best advice and they want to step back and look at it in a rounded way, the best way of doing that is through a broker.
Okay.
They'll give you the most choice because you're tied to one insurer only with the bank. Yeah.
And I presume it's a product for the bank and they want to sell it. So Correct. Even though the mortgage itself is also a financial product and you'll pay your interest and all that over the time of the mortgage. So they're trying to upsell you, I suppose, is it, to add give the insurance add-on. And for most people then, for convenience, or it's the first time buying, so they think this is the way we have to go.
Or they feel that if I don't take the house, then the mortgage won't be approved.
Oh, right, okay.
That isn't the situation.
Okay, so they're 2 separate entities, are they?
2 separate entities. Yeah. The bank are very, very good at doing mortgages. Yeah. I feel you should go to a professional to
an expert does insurance.
The other thing, when someone is going in buying a house, are they buying a let property? Are they buying it to live in it themselves? Okay. Are they going to be renovating it?
Okay.
All these.
Okay. Does that affect the policy?
Affects the policy.
Okay.
And has to be looked at.
Okay.
Prior to them drawing down and signing, because they will need a letter of indemnity from an insurance company noting the bank's interest for them to draw down the money.
So just 2 questions then. So say I'm buying the house and it's going to my family home, but I don't need a mortgage. Should I still insure the property?
Absolutely, you should still insure the property. You won't have a bank interest on it, but you should still insure it, and you do not insure it for the market value of the house. You insure it for the rebuilding cost. Okay. So included in that is.
So we're saying, like an extreme example, the house goes on fire.
Yeah, you suffer a total loss.
Okay.
House burnt to the ground.
Structural or say an electronic defect in the kitchen, some appliance or something like that.
House burnt to the ground, so you have to knock the house, clear the site, go for planning,
Okay.
rebuild it,
Yeah.
all architects, surveyors,
Okay.
planning fees, everything.
Okay.
That all has to be included
Okay.
into the cost of building a house.
Okay. And that's why the mortgage company insists on it. So if you have a mortgage, you insist on insurance,
invariably-
if it happens, their asset is covered as well.
Yeah, like when you're doing it first time out, it's probably easier because you have an engineer's report
Yeah.
and you have a bank valuation,
Okay.
and they will put a reinstatement sum insured on
Oh,
it.
right, okay.
But it depends. People would regularly say to me, well, it's a standard, it's a 3-bed.
Okay.
No, you could have anything from €100 square foot
Yeah.
to €200 square
Yeah.
foot, depending on the finishes. You know, are they solid wood doors, solid architraves, timber
right, okay.
floors, what type of kitchen is
So
in
all those
there?
add-ons then would affect
Yeah.
the insurance policy and
Yeah.
affect the premium. And so how is insurance calculated?
Basically, it's a rate applied to the buildings, and then there's a separate rate applied to the contents, and then it's discounted depending on no claims,
Okay.
alarm, warranty, smoke.
Okay. And is that
Occupancy.
discount on the property itself or on the actual
the premium.
person? Oh, okay.
On the premium.
Okay. And is the what stage of the process? Say you're a first-time buyer and you have your mortgage lined up and all that. When you engage your insurance broker or independent, what part of the process does the insurance company come into it?
Well, you won't physically go on cover until such time as you sign, and that you're responsible. That
Okay,
you
so
are
you
now
put the homeowner.
You're the owner
But
of the
you must
property.
obviously put those things in place before you actually.
Oh yeah, you should be doing that kind of 2 or 3 weeks in advance.
Okay. Yeah.
Now, if you're doing a renovation project, or you're buying an old house,
Okay.
and in your mortgage you have an amount put aside
Yeah.
to renovate the property, and you're going to be getting a builder and an architect,
Yeah.
then you'd need to be doing it sooner, because there is various covers that need to be put in place. Because if you do an RIAI contract, there's a thing
That's
called
an architect, is it?
it's the Architects Institute
Yeah.
Architects Clause. There's a thing called Clause 26,
Okay.
which benefits the contractor doing the work as opposed to the insured person.
Okay.
So we need to make sure that the insured person is who we would look after, has the correct policy in force to
Okay.
cover the existing structure
Okay.
and the new structure being added on.
So is that from example? So that'd be for a new build as well as like a renovation. So if you bought an old house and wanted to.
Well,
do
new
works
build
on
is
it?
easier because there isn't an existing structure.
Okay.
There is a defined product called
Okay.
this. You can do a self-build,
Okay.
or you can rely on the builder's insurance if you have a full
Okay.
contract where there's a main contractor in.
Okay.
A lot of people are doing self-builds.
Yeah.
I would advise that you can do an 12-month, 18-month, 24-month contract.
So that covers you for the duration of the build, is it?
Yes,
Okay.
it covers.
Okay.
It covers all the stock on site. It covers the
Okay.
property in the course of being built,
Yeah.
and it covers the legal liability of
Okay.
all the tradesmen coming in.
Okay.
It covers the policy holders.
Okay.
So if a guy injures himself
Yeah.
on site and claims from the policy holder,
Is this
there's
the
cover there for
homeowner
it.
takes out this policy?
The homeowner takes this
Okay.
out if they're doing a self-build
Okay.
and there isn't a main contractor.
Okay. And then obviously then that does the duration till the build is finished, and then
Build
that-
is finished, then we go on to a standard normal
house-
household
okay.
policy.
And then what are typical? I suppose one is how much it costs to insure your house and how much is the premium, and then isn't there a thing that you can elect to kind of pay the first couple of thousand, like
so-
it's called an excess or something?
Yeah,
is it?
so we find when we're competing against the direct insurers online, people go in and they put in the buildings, they put in the contents,
Yeah.
and they see the premium.
Yeah.
Then they play with the excess.
Okay.
So you can take 150
Okay.
up to €1,000 excess,
Yeah.
and that reduces the premium.
Okay.
So what you find is guys look for the cheapest premium and they put in €1,000 excess.
Okay.
Which isn't always very wise, because then they're paying the first 1,000 of
Yeah.
each and every claim that occurs. So, by playing with that on direct with one insurer,
Yeah.
you may have, for the same premium, have got the excess cheaper
Yeah.
with another insurer.
Is there a recommendation on excess? Is that a personal choice or?
Personal choice, I think the
Yeah.
standard one we would do is €250,
Okay.
because you're not likely to claim
Yeah.
for something at €250.
Yeah. Yeah.
For
Well,
example, there's a couple of new
yeah.
products that have
Yeah.
been launched recently, and they have exclusions in for bouncing castles and trampolines.
Yeah.
So
Okay.
this is something that the normal
Okay.
member of public would not be aware of. So you rent a bouncing castle for a communion and a child gets injured, and next thing your household policy is saying that there's no cover there for that child.
Okay.
So it's important that you know what you're buying, your
Does that
asset
mean that-
is on
yeah.
the line, so
Okay.
it's important that it's done
Does that
properly.
mean then at the time you take out your policy, you elect to put that information on the policy? Is the insurers informed?
Well, no, some insurers included, others
Okay.
excluded.
Okay. And what about, I suppose, in modern day Ireland now, people, their family home isn't just a family home, they could possibly rent it out. What's the, kind of like this Airbnb model, things like that? Like, where does your home insurance policy cover you there?
Yeah, Airbnb is an interesting one because it's something that hasn't really. I've yet to have a client come on to me saying I'm letting my house to Airbnb.
Okay.
Now that is a material fact. So if you are letting your house out for Airbnb and you don't tell the insurers and there is a claim, you could well void your policy due to non-disclosure of a material fact.
Okay.
There are products now have come out that will allow you to cover Airbnb because they're short-term lets. You have high volume of people in a short basis, which is different to somebody who's letting the house for a year. So there's a let property policy, there's self-build, there's owner-occupied, there's Airbnb. You know, some guys would buy a house and let a couple of rooms. That needs to be disclosed to an insurer as well.
Okay, so you can have like just rent a room out in his house.
Rent a room out to one guy buys it and he has two people in.
Buddies might start out.
So larceny cover is excluded on that basis. So there has to be forcible or violent entry or exit from the building for theft cover to be applicable. One other area where people get confused all the time is on all risks. People say, "Oh, I have an all risks policy."
Which means what, to cover everything. So
they say, "Oh, I'm covered for everything."
Fire,
But so there's two bases. One, you have a material damage all risk policy which covers accidental damage to your buildings and your contents. So a guy's up in the attic and he puts his foot down through the ceiling. That's accidental damage.
Which happens.
Your 2-year-old pushes over your 50-inch television. That's destroyed. That's accidental damage. That's covered. But then there's all risk items, covering items outside of the home. So miscellaneous items of jewellery, bikes, sports equipment,
and that's
leather jacket.
Theft, is it, or?
It's covered loss, theft, damage. Someone has an engagement ring. I know that we're talking kind of first time buyers. Someone will have an engagement ring, they're getting married, they're buying their first house. They insure their engagement ring. You hit the engagement ring off a wall and damage the ring, the stone, that's covered. Once you have it specified on it. So it's important that people understand the difference between inside of the home and outside of the home. Miscellaneous all risks outside, or you can specify items outside of the home.
So then if I'm buying a policy and I hear the word all risks, I need to specify that.
You need to understand all risks would be material damage all risks, which would cover items within the home. You would have to specifically specify or ask for cover for miscellaneous items outside of the home, or if they're over a certain value. You can.
It's a huge amount of information there. Like,
huge,
and even as a first-time buyer, like that's really daunting. So, like my feel with that, it makes sense to go to an insurance company rather than a bank, isn't it?
Yeah. So, like, the household spectrum is huge. You have non-standard construction with a lot of these architect-designed homes. So standard would be your slate roof, your block wall. So you might have 100% flat roof. You might have timber clad. You might have timber frame. All these are vary on the insurer.
If someone's building their dream home, they're the things they want in their house. But obviously, their insurance policy needs to be tailored to meet all that.
There's high risk, or there's high end providers like Hiscox, dual underwriting. Chubb would be the kind of what we call the high net worth. So you can do that all the way down. Like, we would do an awful lot of our business with Zurich. We like the policy wording there. Their rate is very good. Their claim service is excellent. No point in having a policy and you go and there's an issue with a claim, or
you pay 5 years premium and now
they don't react quickly. So especially now with the weather coming in, that's meant to come in this week. Whether it will come in or not, I don't know. But that you have someone there who will react in the event of a thing and get you sorted and protect your major asset.
And then just I suppose nearly finally now, the first time buyer, I have my mortgage, I have my house, we're all ready to go. I'm going to get my keys, say, in 2 weeks' time, and then I've engaged with NBC Insurance. I've got exactly the policy I want that suits my needs. What do I need to do? So is there letters that I need to give? Do you need to provide? Is there an indemnity?
So we issue you with a letter of indemnity that you give to your solicitor, who then puts that in with the contracts, and the bank allows the mortgage to be drawn down. The first time buyer can pay by direct debit, he can pay by Visa, Laser card, he can pay by cash.
Very good.
But invariably, first time buyers,
Okay.
people spread it out over 10, 12 months.
Okay.
The one thing to be careful is that you just don't leave the direct debit rolling, and in 4 years' time, you've now more contents in the house than you had when you started. You've changed things around, and you don't have the correct sums insured on it.
So that's something would you recommend reviewing your house insurance every?
Like we renew them annually.
Annually, okay.
We renew them annually.
Okay.
If it's on direct debit, it's still renewed annually, but it's rolled over.
You're pretty much changed up the outside.
We would regularly change people around between insurers because there's always different offerings coming in and different covers, and some insurers are back in the market to write business, others are looking for rate increase, so it's important that you shop around for the best value that's there.
Well, that makes sense.
But cheapest isn't always the best either, you know. I never like to say cheap, I always say the best value that's there.
Of course,
from,
because it's not just price, value.
No, price,
service, communication, relationship, trust, all that stuff.
Yes, everything that's there. Like at the end of the day, all we sell is the promise that we will pay in the event of something going wrong. And that people are happy that...
Which is what an insurance policy is, isn't it?
They have to trust that we'll be there in the event of something happening. And I suppose, look, we're over 30 years or 36 years in existence, so
you've seen it all.
We've stood the test of time, and we've put people back following complete total losses, and we put them back and got them sorted. So.
Great. Well, listen, Des, thank you very much.
Thanks, Dave.
Very, very informative here today.
Thanks very much.
That's Des Murphy of NBC Insurance. We'll put Des's details on the screen if anyone want to contact you via website, is it?
Yeah, www.nbcinsurance.com.
That's great, Des. Thank you very much.
Dave, thank you.
Thank you.
Thanks indeed.